Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We've been coming to you from Crypto Evolved, hosted by Viable Markets. It's the first industry conference focused on cryptocurrency market structure. Joining me is Josh Stein with Harbor. It's great to see you again. I feel like we'll just travel the country in the cryptocurrency and blockchain conferences. But last time I had you on the program, you talked about the next big thing in crypto, security tokens, also known as tokenized private securities. Remind us what those are, and really what are they being used for? Sure.
So a security token or tokenized private security is having a token represent that share in a private company, an LP interest in a fund. That security interest that today exists only on paper, we put this electronic wrapper around it called a token, and now I can trade it as easy as sending an email. We're going to bring liquidity to private securities that today doesn't exist.
So what are the primary benefits of security tokens for asset owners and also for investors?
Sure. So for the investors, it's liquidity.
Right.
And it's the ability to invest using cryptocurrencies. The liquidity is near instantaneous settlement with no counterparty risk. So you can trade 24/7, 365 around the globe. For issuers, for people who are trying to raise capital, they can syndicate more widely. They can now raise capital at a more retail level from around the globe. So for people who are particularly sensitive to the cost of capital or want to get outside of traditional institutional channels only, they now have the ability to tap capital worldwide from a more retail-like investor.
Well, going back to traditional institutions, I would imagine the volatility that we see in names like Bitcoin, for example, are one of the reasons why they have been slow to adopt that. What role can security tokens play to provide that stability?
I think security tokens can become the new gold standard for what they call stable coins on the blockchain. So right now, whenever you do transactions on the blockchain, there's a lot of friction because of the currency risk. I have to transact in Ether or Bitcoin or another currency that's highly volatile. A lot of these transactions where we're trading, say, tokenized securities, real world assets, we want to be able to transact in dollars or euros. If we had a crypto dollar, that would take away so much friction. It would revolutionize the crypto economy. There are stablecoin projects where you stake collateral. Essentially, it's a margin loan, and you get stable coins. You get a crypto dollar in exchange. Once you tokenize real estate, you now have a stable asset to back that stable coin. And so, in essence, tokenized real estate can become the gold standard of the new crypto economy.
What steps have to happen in order to get to that point?
Yeah, they're both, it's a technology step and a supply step. The technology step is these stablecoin projects that use collateral, like MakerDAO, need to have the ability to take multiple types of collateral and value it. MakerDAO will take that step later this summer. So that's a technology step coming very soon. And then the next is the supply step. You need to tokenize real estate, you need to tokenize other stable assets that can be pledged as collateral, and that's all coming later this summer. Harbor will be coming out within the next few months with our first tokenized offerings.
All right. Well, thank you very much for joining us at Crypto Evolved.
Thank you, Jill.
Thank you for joining me throughout the day. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.